All right. So this is the next trading concept video, and if you've watched any of my other videos, any of my trade recaps, anything like that, you know that this is without a doubt the concept I use the most in trading, and I would honestly say this is the most useful single concept you can use in trading. This, when you pair it with other confluences, it's insane on its own, very useful. It's literally like it's like if you're looking for a treasure chest, like the map to the fucking treasure chest. Of course, you still gotta dig it, and you gotta see what's in it and all that. But this is literally the key to understanding market. It constantly works. Biggest tool in my arsenal. You can use it for entries. Look for areas that you think price is going to react at. You can fucking use it for take profits. This might be a little bit of a longer video. It might be shorter. It kind of depends just how long it takes me to explain it. But every single minute of this video, you should be taking notes on. Every single minute of this video is going to be incredibly important. And if you can wrap your head behind this concept and around this concept, you will make a fuck ton of money off of it. Okay, let's just get into it. This is the Fibonacci retracement. If you've watched my other videos, you've already gotten a good understanding of how market moves, highs and lows, downtrends, uptrends, individual candle structure. So let's start putting together more pieces of the puzzle. Now, to this video, and then watch my break of structure video, which I'll most likely post tomorrow at some point. But once you have the market moving, once you have that kind of under wraps, and you have this Fibonacci retracement and extension concept learned, and then obviously individual candle structure. I'm tired. I don't know if I already said this, but that, and then break of structure. Once you have these three key ideas understood, this is how you can actually start trading. And I haven't personally tested it off of just these three strategies and concepts because I use a fucking shit ton. I probably use over 10 concepts and confluences on every single trade, but I have a strong belief that just off of these three concepts, the break of structure, the candle microstructure, holy shit, and Fibonacci retracement, I think you can genuinely make money and become a profitable day trader off of just these three concepts. Then, once you start using other SMT concepts, and smart money trading, that's what it stands for, like an SMT divergence, fair value gap, order block, which I'll teach later on. My plan is go with this, teach this Fibonacci retracement, then I'll teach the smart money trading concepts like break of structure, fair value gap, order block, all of that, SMT divergence, SMTs. And then once I'm done with every single smart money trading concept, I'll go on to high time frame analysis, which I use a combination of all three of these in every single trade I make. And then I expand and use the little checkpoints in between all three of these concepts as well. And I'll learn all that. I mean, I'll teach you guys all that. You'll learn all that if you watch these videos. I will seriously turn you guys into profitable day traders. And if some of you guys are starting this shit smarter than I am, then I genuinely believe that you could become a better trader than me, quicker than me. Now you still got to be outworking me and working harder than me to get there and pass me, but I think the potential's there. So let's get it right into this now that that little spiel's done. So Fibonacci retrace, what levels are important, at least to me, and in my strategy. So this, I wouldn't trade on anything below this 23.6% level or this 38% level. That's the biggest thing. Actually, we'll start even deeper than that. We'll show you exactly how to draw this out. This is likely going to be a longer video, I'm not going to lie to you. So, say that, first off, say you're looking for a trade, we're in an uptrend, and you're looking, this is just a brief overview. Later on in the video, I'll show like better examples on the actual chart so you can actually wrap your head behind this. So, say you're looking on an uptrend and you're trying to get in this uptrend at a discounted price. So, real basic. What you do is you draw your Fibonacci, you start it at the bottom, and then extend it to the top of the move. So, you're expecting a rejection at one of these points. So, we're gonna wait for the top. So, in an actual price structure, this would, if we're following completely on Fibonacci retracements, like if we were trading completely just off the Fibonacci, we would want this high to be around this, what's it called? This 127% extension mark. Then all of a sudden we see, we'll just use our microstructure concepts for this. So we see this little reverse inverted hammer concept here. And then we get it followed by an engulfing right here. Now, keep in mind, these are ideal conditions that I'm showing you for the demonstration. So, and we'll show a few like more awkward examples once we get into the actual market stuff, but this is just a prime example because it's just explaining the strategy. So we get this hammer, and then we get this engulfing candle, no wick. So we are expecting a retracement. We're drawing our fib here. That's a long position. That's not right. We're drawing our fib here, right to the peak that this went to. Now we also have a double high, which is kind of a smaller confluence. I'll explain that when I explain break of structures. I'll go into I'll just do a whole video on liquidity sweeps, double highs, all that. And we might just group that into liquidity, to be honest. But so off of this right here, you could honestly enter. We're disregarding this level because you don't really want a good trade off of this. But we're going to pair this with liquidity most of the time. But just off the fib, we see this 38% to 62% retracement. Now, this is a common zone. We might see a rejection off here. And we'll just use our same little concept, which is this little hammer, and then following with an engulfing. So the way this kind of works is, if you get a rejection this quick in the first place, then it's a pretty strong trend. So then in a case like this, if I was trading off of this, and I saw this rejection right here, I would enter my position using this right here, blah, blah, blah. So off of this is, obviously I'd want a little more confluence, but just off of this, you could make a pretty strong case that we're rejecting inside of this area. We also have a fair value gap for retracement here. Then we get this rejection. So we can make a pretty good case here. If we enter off of this candle, we can make a pretty damn good case, if we go from this high to this low, that we will receive a 79. Okay, so we want to move this. So we can make a pretty good case that we will get a 79% extension off of this. So we mark out our little long position here, and we're entering right here. And obviously all we did was we made this range, 0 being here, 1 being here, Then we adjust it to this retrace, the bottom of this retrace, and then stop loss, obviously at the bottom. And then our take profit would be the 79% extension. That's a base take profit. That's an 80% return trade right there. Nothing inherently wrong with that, but that's kind of the trade you get. So we get off that. That's a valid concept right there. Now, this is where you get really good trades off of. So right here, from here to here. So if we can get a retrace into this zone right down here, the 79 to 88.6% retrace zone. If we invalidate this 88.6% retrace zone, unless there's an order block there or some sort of liquidity concept, I wouldn't really recommend taking that trade because it's not really like that. That comes really close to invalidating the trend. But so then if we get this 79 to 88% retrace zone, and then all of a sudden, we get one of these hammers. If I would have taught these micro BOSs already, then I would just be using these, or if I would have went more in depth on it, but you can just apply this. Once I teach the micro BOS, you can use it in place of these, but then you get this, and then you get this little, engulfing candle right here. That, or even if I just get 3 consecutive green candles, sometimes I'll honestly take this if I have enough other confluences. But boom, we see this retrace right here. And then we can get in our little long position here off of this candle, put it at the end of the retrace, and then off of structure like this is our first take profit. So say we 50% our position right here. That's $1,000 if you're risking $1,000. So instantly you can bet on it to come back to that zone. Even if we're in a downtrend, there's a chance we'll get back to this zone because of this order block right here, which we'll teach about later on. I apologize. I kind of keep getting ahead of myself here. But so then we extend this from the top of there to this bottom of the retrace, and then this 127% extension. This is only valid if you're trading with the trend. So if we're in an uptrend, and we're trading uptrend, then you can use the 120% retrace. Otherwise, it's completely invalid. Or if we're in a downtrend, trading downtrend. Anyways, so then you extend the other take profit there, take about half of it there. So you made $1,000 on this one, and then you made 2,000 on this one, or something along those lines. Oh, no. So you made around 2 bands off of this entire trade. Because you partialed at this point, and then you took the rest of your partials here. That's a basic overview. If you need me to go more in depth or make a part 2, just comment for the video. I'm not going to do the downtrend thing, like the downtrend side of things, because it's a waste of time for you. It's a waste of time for me. All you have to do is do the exact opposite of that. So now let's get into some real market examples. We're trading during times of volatility, especially if you're new to this shit. And we'll go way away from any of this price structure. We'll go to somewhere where we have no markings at all, just to show how prominent this is. So we'll go right here. So we have an established trend right here. So we analyze this right here. Where do we really want to go off this? All right, we'll go right here. So see this? We're on a downtrend. So we're looking, obviously this is going to be a like nearly ideal situation here. So we're looking for a deep retrace, which this fits that perfectly. This 79% to 88.6% zone right here on this high, we enter that exact zone. Then what do we immediately find after? Hammer candle, inverted hammer, right here, barely any wick on that, and then we get this engulfing. So we enter right off of there with our short position because we are in a downtrend. So we get in on that. We put our stop loss all the way nice and tight right here. And then we see how deep this downward move went, which is right here. And then to that high. So then we have our 127% retrace or extension right there. Now, what do we get out of here? If we don't scale any partials, we let it all ride, which we're trading with market, so we probably wouldn't take any partials. Boom. All of a sudden, that's a $3,600 trade. We'll do like 2 more examples on this. And then we'll go, that's about it. We'll do 2 more examples and then give you your homework and call it a quits for this. But this is a more variety example, and we honestly, none of this is scripted, so we honestly might not even take the trade here. We'll see what's on this. So right here, nope, look at that. Perfect retrace, right to that 0.38% zone, to that 62% zone. What do we get here? Right here, we get this micro BOS. We get this higher high, higher low, or high, low, and then we get this higher high. So what could we do on this? We enter on this. Now, is this we don't know if we have any SMTs. So on a trade like this, where we don't know if we have any SMTs, and we also have fucking, what's the word for it? And this is a pretty weak break of structure. We kind of just go straight to that higher high. It's still valid. So we would probably, typically when you aren't sure of something, you put at least a 5 pips extra stop loss on it. So we have 990. So we would go right down to 940, which kind of tanks our, what's it called? I'm trying to get this right on 940. That kind of tanks our risk to reward. But then we go here, switch our fib up to an extension, which would be from here to here. And once again, that's the wrong fucking thing. Long fucking day. Okay. So, boom. That's right there. And boom. That's still a $1,000 trade off of that. Not ideal market conditions, but you see it right there. 120%. We take it out right there. And like I said, fucking it works. There's a reason why people use shit like this. Well, when we go into, especially now that we teach the fib we taught the fib concept, once we go into like micro BOSs and break of structure and all that, then we can just, the way we're going to do this is every time we teach a part of our strategy, we're just going to build off of it. We're not going to be people like TJR where we teach one individual concept. We're going to be constantly building off of it so that you can see how this actually affects your strategy and develops your strategy as a trader. So that's kind of chippy there. I don't know if I'd really be looking for many trades there, but right here, here's a decent example. So we get this here. We're moving downward. Once again, wrong thing. Hear me out. They look really similar. Anyways, so our fib here, right here, and then when do we fill this position, this order flow? Right here is the deepest retrace we get. So we would see this here. Don't really get any crazy good signs, not gonna lie. We could make an argument right here. This is kind of going to be a poverty trade. This is going to be similar to some of my trades from this week, where they're doable, but they're not really going to net you insane returns. So we fill this Fibonacci flow, and then we get this low, we get this lower high, and then this lower low. So confirmation, unfortunately, would kind of suck on this one. We would enter with our short position right on this candle closure, and we would put Now, since this is a pretty prominent break of structure, you could put the stop loss right on that edge and have pretty good confidence in it. So now that, once again, we're trading with the trend, even though it is kind of chippy, so you might want to take partials on this, we'll kind of just see how it plays out. So if we went right there, the deepest part of the retrace is right here. So that's going to be our 1. We're going to go right to this top, and then we're going to target right down here, and boom. That's a $1,100 trade on subpar market structure right there. So, I mean, it's right there. Proof is in the pudding. So they're all random examples. I'm going to get back to this just for my trading tomorrow. Yeah, we went far back. Not very easy to script that. Holy shit. Yeah, we went far back. When is this? This is back in September. Holy shit. Yeah, we gotta get out of here. But as you can kind of just see, like, fucking proof, like I said, proof is in the fucking pudding. So, homework for tonight. Just mess around with the Fibonacci, you know, kind of just pause the video at some point, look at my percentages, look at my like points in it, and kind of just copy those to your own settings, use whatever colors you like, get that set up, get your fib set up, that's the biggest thing. And then I would say find at least like 5 examples like I was just doing in market where you would test out the trade idea, see if it would work. And then after those 5, if you want some extra credit, go through like replay trading, which is pretty easy once you have your fucking what's it called? Trading view account. You can just hit replay, select a bar, select a date, whatever you want, and then just go off of there, you know, maybe piece together a few trades with it. And we're getting really close. One more concept. Once I teach you that micro break of structure, you could trade off of this stuff realistically, but once I teach you that microstructure and the breaks of structure and all that, then you're gonna excel. You're gonna be able to actually like place a variety of high confluence trades. And then once I start teaching these smart money trading concepts, you're gonna get a lot better at trading. I'm gonna be honest with you. You're gonna get pretty damn good. As long as you're keeping your psychology and everything, you'll have that going for you. Get some more strategy developed, and then after the smart money trading concepts, we'll just keep fucking going. And I mean, it's gonna come quicker than you think it is. Like right now, it might seem like it's going a little slow. This is kind of the basics, or at least the start was. This is the first like major concept that might be hard to grasp, and that's why it's already 23 minutes right now. So this might be hard to grasp, but this is the first really advanced thing you're seeing. A lot of traders use this type of shit. And if you can grasp your head around this is going to be very beneficial to the rest of your trading journey, knowing how this fib system works. And that's about all. Just learn this shit. Go do your homework. If you want to get better at this shit quicker, go do the extra credit too. And have a good one.